Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akhil, the top headlines this hour. Indian markets snap two-day losing streak with the Nifty reclaiming 10,950. India Wix declines. And open interest surges in Ajanta Pharma and HUL as traders take fresh positions in their respective futures. Fuel retailers are the top gainers on the Nifty as crude continues to edge lower. And Zee Entertainment may see higher ad spending aid its June quarter revenue in its first quarter results coming out later today.
Okay, those are the top headlines at this hour. Let's also tell you what's happening with the markets currently after yesterday's fall that one saw, which was largely got to do with unwinding in yesterday's session. A bit of bounce back has been seen, so it's looking like a positive start. Nifty is up almost 27 points. Bank Nifty is also surged. That's seen gains of almost 80 points. Some contribution coming in from heavyweights like ICICI Bank, I guess, in today's trading session. Even the broader markets, which started on a very mixed note this morning, but have seen some bit of traction. Nifty mid-cap index is up over 100 points in trade, and the BSE small cap index has surged almost 57 points. Yesterday you did see the India volatility index surging nearly 5%, and today we've seen some bit of cool off. Remember, the surge that one saw for Nifty towards 11,000 was supported due to lower volatility, so still I guess between 12 to 13 should be a comfortable mark for the bulls. Let's also tell you what's happening on the option side. Yesterday there was a call writing seen on account of which you did see the Nifty PCR also falling to levels of 1.62. We'll tell you what the current level of PCR is, but that's the open interest change. That's the PCR, 1.62. So no major change, however, seen as of now. It still remains around the same level where we saw the closing coming in yesterday. Let's just pull up that once again. The change in the Nifty, some of the option strikes. So 10,900 and 11,000 puts. The red bars are your put strikes. So they are seeing some bit of open interest addition, whereas on the call side, 10,900 as well as meager additions seen for 11,100 strike as we speak. So the range in terms of OI concentration is 10,600 put and 11,000 call. Institutions, what did they do yesterday? Remember last week throughout there were a lot of longs being built up on the index futures side, and probably that's taken the ratio from 35 from they started the series to 52. So yesterday was all about unwinding on the longs and short side, but if you look at the index options activity in yesterday's session, there was some bit of hedging of the portfolios or the positions FIs would have taken, because on the call as well as the put side there was some buying seen of almost 11 to 12,000 contracts. Agam.
Well, Navneet, in today's day of trade in terms of stocks, I'm watching out for Ajanta Pharma because that stands out in the pharma pack you can see that there's some traction there, and not too much to speak for when it comes to its underlying, but there is an increase of 13% in its open interest. Hindustan Unilever, on the other hand, is now edging towards a mark of 1,700, and if I'm not mistaken, it's actually currently at its day's lows, and there is an increase of nearly 11% in open interest. Do remember, we had seen tremendous strength in HUL until, of course, after its results have come through, and while the earnings are very steady, I reckon this is largely towards a profit-taking, and Mindtree, of course, is the other one, which is also down by as much as, well, 0.6%, but there is still more accumulation in open interest, continues to see more add up. And Balkrishna Industries is the other one, where it's down by as much as 1.3% increase in OI. PC Jeweler, well, I reckon there's not too much change in its underlying, but there is again more position building in PC Jeweler. Of course, in today's day of trade, I'm going to watch out for Hindustan Unilever, Navneet, and of course something like an Ajanta Pharma.
Yep, HUL is witnessing some bit of result reaction in today's session. Profit booking kicking in post the numbers. Well, we'll get you some views going in on all these stock futures, but before we get our guest in the show, here's a reminder for you all. If you have any queries in the futures and options market, you can call us now on 022-4540-4141. Write to us on Twitter, Facebook, and for the ones who are watching our show on YouTube, you can write your queries on that platform as well. Just don't forget to add the AskPQ hashtag. Let's welcome our experts then, Nirav Chheda of Nirmal Bank Securities and Amit Shah of BOBCAPS Markets. Both are here with us on the F&O Show once again. So good morning to both of you gentlemen. Amit, let me come to you. There was a mild bit of correction which came in yesterday's session. Some bit of profit booking may have kicked in. Are you using these corrections to buy into Nifty or Bank Nifty?
Frankly, I'm staying away, considering after the breakout what it gave on above 11,000 mark, it was tempting for a fresh high. But all of a sudden, the mid caps and the small caps are the more divergence which they are showing compared to Nifty and the Bank Nifty trend. So I'll wait for some confirmation. Till the time 11,000 is not sustained, I would rather miss on those 100, 150 odd points, but wait for a confirmation. Because looking at the broader trend of the mid cap and the small cap indices, there is still room on the downside for 7 to 8% more, which can correct. So keeping that in mind, I would wait for some kind of a confirmation to build in for Nifty as well as on the Bank Nifty, because Nifty is purely managed by some of the heavyweights like IT and consumption stocks. Reliance was outperforming since the start of the series. So I would wait for some confirmation, let the strength build in, and not choose based on few of the stocks which are holding on to the Nifty right now. Okay.
Nirav, good morning. Would you concur? Is there some caution building in when it comes to your view on the benchmarks as well?
Yeah. I 100% agree with Amit. If you see, it's like we are trading in two different markets, where index is one market which is going high, and a lot of data is supporting it. But if you look at the other stocks in the F&O space, most of the stocks are making 52-week lows. If you look at the metals pack yesterday, almost all made 52-week lows, even Tata Steel. So again, very difficult to judge whether the index will move up, and along with it, the stocks will move up as well. So staying away and till 11,200 is broken on the upside, which is the all-time high. Till then, I do not think one should be buying very aggressively also. On the stock-specific front, once 11,200 is broken, I believe some short covering should come, and only once this short covering comes in stocks, only then one should be buying aggressively, not at current levels.
Okay, so wait for that breakout on Nifty off above 11,200. Remember, all-time high levels are also somewhere about 11,171. So that remains a key on the upside. Amit, since you're staying away from Nifty, Bank Nifty, but you've held a positional call with conviction in the last, I guess, 3 to 3.5 months.
Right.
Are you still holding that Nifty IT position?
Yes, so in fact I have a buy recommendation today as well for this on the index space. So that's the trend which has been quite clear. And if you see the stocks also of the Nifty IT component have been quite favorable except for few.
True.
Earlier we saw TCS dominating, now we see Infosys taking the lead, and most of the mid-cap ITs like Mindtree, NIT, Tata Elxsi all now participating again. So I believe there is still room on the upside for IT space to touch 15,000, and that's where it can see some kind of a time and price consolidation. But overall trend remains very much positive. So just to cover on my index strategy, recommending a buy on Nifty IT with a stop loss at 14,450, and one can look for an immediate target towards 15,000 on the higher side.
Okay, there you have it. Well, Amit remains long on the Nifty IT index, and he is targeting levels of around 15,000 at this point in time. But Nirav has a Bank Nifty strategy, and he is actually going long on the straddle. So before we go ahead and take in Nirav's strategy, let's understand what a long straddle is. It is one where one buys an at-the-money call and put in anticipation of increase in volatility, and when volatility increases, followed by expansion in option premiums, the strategy becomes profitable. Nirav, can you take us through the reasons why you're going long on the straddle, and perhaps also take us through the strategy that you're playing out?
Yeah. See, at this moment, there is no apparent Nifty trade on a directional front and also on the Bank Nifty front. However, if you see, the straddle looks very cheap at 225 points with about 3 days for expiry. Bank Nifty in general on a weekly expiry front generally moves 400, 500 points on either direction. And it is now going to consolidate in between 26,000 and 27,000 odd levels. So there is enough space for Bank Nifty to move about 300, 350 points. Along with it, I believe the VIX should increase as well because of this correction yesterday, and probably we'll see more corrections like those. So again, the VIX should increase, and I believe the VIX will play its part, and that is why one should be going long in the bank Nifty straddle of 26,800, about 225 points you'll be paying. You can keep a stop loss of about 60 points premium loss when that comes down to 165, and your target should be around 120 points gain on your premium of 225.
Okay, so that's a long straddle coming in on Bank Nifty from Nirav's side. But let's also get you some stock-specific ideas going. And in terms of stock futures for the day, Amit, Yes Bank, it's touched all-time high levels in today's session. I'm sure there's a breakout that you're seeing on the chart.
Yes, so if you see on the monthly chart, the stock has given a very strong breakout about 382, and it is sustaining quite strongly above that. The open interest has been that aggressive since the inception of the July series, but if you see today, it has started to build on. It's almost up by around 3% on the open interest. So I believe the stock will see a very good run up from here. On the upside, can target towards 410 levels. On the downside, one can trade with a stop loss around 375. And someone who is a positional trader can utilize any dip towards these levels to enter into the trade. So this would be purely for someone who is a trader and wants to trade for a quick momentum. But positionally, I believe the stock is poised for 420 and higher levels on the over a medium-term perspective. Another idea is on Gale. Now the stock, after a breather on the downside, has seen a very good breakout yesterday. The stock has seen irregular kind of a flag formation, and it is taking a good support around the 357 odd mark.
Right.
I continue to believe that if it continues to hold about 357 and the more it sustains about 365, I believe the stock can see 380 levels on the higher side.
Okay, so two long calls coming in from Amit, and incidentally, Nirav also has Yes Bank on his radar towards the long side. Amit, why don't you, or rather, sir, Nirav, pardon me, why don't you take us through your two calls for today?
Yeah, see, I don't have to speak much about Yes Bank. Amit has said almost everything. I believe it is a breakout and it is here to stay. Yes Bank can move up in the medium-term perspective to 430, 440 odd levels also. So one can buy at current levels. You can keep a trading target of about 400, and the stop loss should be around 370. The second one is a buy on a defensive counter called ITC. I've seen good amount of buying happening in this counter, and it had been consolidating in between 255 and 290 odd levels, and it is it touched near its low and is going up. I believe it can go up towards 290 odd levels, so one can buy at current levels with a stop loss of about 266 and a possible target of about 281, 290.
Okay, so those are a couple of long strategies coming in terms of stock futures for the day. But let's also address some stocks that are buzzing today. And one of the stock future is Adani Enterprises. It's just not about today, but the stock has been going up in the last 8 trading sessions. And if you look at the return in last 7 to 8 days, it's up over 30%. We've also seen in the last 7 to 8 sessions there are some longs being built up for Adani Enterprises. I mean, it's a high beta counter. I know somebody taking a fresh trade here can be risky as well. But tell us, what are the charts indicating since the stock's been going up in the last 7 to 8 days?
See, it's more of a pullback. If you look at a broader structure, the stock has been falling since 195 odd levels to almost 100 levels, making a lower top, lower bottom formation. So this is just a sign of a pullback, what it has seen after this steep fall. So I would not be a buyer into this counter and not focus on this kind of a pullback. It's purely an avoid. Someone but who is a speculative trader can trade with today's low as a stop loss and trade for some kind of a pullback towards 144 to 145. But positional investors definitely needs to stay away from these kind of pullbacks.
Okay, there you have it. That's your view on Adani Enterprises. There is one stock out there in the large cap space, HUL, which is buzzing in trade, and we all have a lot of queries. So I'm going to quickly go to HUL first. Before I take the views, I just want to recap that the earnings for HUL are largely positive. Though there have been some misses on the top line, on the whole, when it comes to its volumes growth as well as margins, they're playing out well, and as management has suggested, there's some steadiness coming through. And for the third straight quarter, the company's gone ahead and posted a double-digit growth in terms of volumes. And again, margins, we are seeing substantial expansion, despite the fact that they did see an increase in raw materials costs. This is as far as fundamentals go. We must remember that that HUL over the previous few weeks has been also making lifetime highs. Now, keeping that into perspective, we have two queries coming in on HUL as well. It's down as much as 2.6%, edging down towards 1700. The first query is from Nikhil Raja. He says that he is shorted HUL futures at 1725. And his question is, should he book profits or should he wait for 1650? And the second question is, of course, the team, could you share views on HUL now that the result is out? This is from Ravi Shankar, another one of our regulars. So, Amit, I'm going to take it over to you. How would you deal with HUL now that the cat is out of the bag when it comes to its earnings?
So most of the technical analysts would believe and would stick to this, that trend is your friend. So though the stock has seen a very good run up from here, it is just a breather in terms of a downtrend which it is witnessing.
Right.
So definitely though he is making a good 25 odd points on profits, but I would encourage to remain as a buyer in this kind of counters because these structures normally tend to reverse very quickly.
Right.
So it's just a consolidation or a breather what it is taking, but the up strength always are very much on a stronger note when it comes to these kind of technical structures. So definitely I would not encourage any short positions. Fortunately, he's making some money. He can pull out and wait for a right level to remain a buyer in this counter.
So what's that right level? How much more correction?
So I believe maybe towards 1680 would be a good entry point where the risk reward will again be very much favorable on the positive side.
All right. So booking profits is what Amit is you're recommending to at least Nikhil at this point in time. He's making 25 points at this point. So yeah, there you have it.
Yes, that's the technical view coming in on HUL, the stock which has been trading around its life highs, but today correction has come in after the numbers and it's largely looking like profit booking. Let's take some more queries. This one comes on HDFC. On YouTube, Bikash Paikre has written to us. He's got the 1980 call strike at 21.8. It's at the money call strike because the underlying is also trading around those levels. He wants to know what to do with this one. Nirav, I'll come to you. HDFC 1980 at the money strike, and I think the premium is also currently the same where Bikash has taken his position at. What would you recommend him to do? Hold on. If yes, what should be the target?
Yeah. HDFC is making a higher top, higher bottom formation. Today it has witnessed a breakout. I believe, in fact, this week it has witnessed a breakout. I believe it can go up towards 2020 odd level. So you can hold on to long positions. Once that premium of 1980 call comes to around 30-35 rupees, that is where you should be booking profits. He can keep a stop loss of 15 on his call.
Okay, that's the view on HDFC, that specific one. Of course, there are a lot of more queries coming in, but the next one is a little more curious, and it's on JP Associates. Some would argue about and perhaps question as to why JP Associates is still in the futures and options segment at this point in time. That said, it is up to the exchanges and the SEBI. For now, the stock is up and about. It's up, advancing by as much as 4.3%. We do have a question on JP Associates from Satyarajan Jaina on YouTube. He says, what's the view on JP Associates? So, Nirav, I'm going to throw it to you. Firstly, what is your view on JP Associates? Secondly, would you take the risk in dealing with something like a JP Associates? I'm not sure of how liquid this particular counter is. Leave aside how risky this counter could be.
JP Associate, my view is negative. It is in a negative trend, and very likely it is going to come down further. It is making a lower top, lower bottom formation. I'm not very sure about the open interest in this stock. However, I believe it can come down towards 12 odd level, so one can go short. I believe going short, there is less risk in this stock because whenever it goes up, there's a double fall that really comes with it. So going short is much less riskier in this stock.
Okay, going short is less riskier on this stock is the advice coming in from Nirav. Yes, this too is a very high beta counter, so to be very careful if somebody is initiating long positions on something like JP Associates, because when you see markets cracking, these are the stocks which tend to correct first with markets when markets go down. Let's take some more query on YouTube. Somil Shah, he's bought two stock futures. One of them is RBL, one of those stocks actually where both fundamental as well as the technical experts have been bullish on, and the the other position he has on Z. Let me address one by one. So let's just pull up RBL futures. He's taken a position for the July futures at 583, and from there it's come off to almost 557. Amit, should he be closing his position, booking losses, or should he wait it out and put a stop loss?
See, definitely from his buy level, the stock is very much down. But looking at the broader structure, I still have a positive view in this counter. Maybe the momentum has been lost at this point of time, but it will take some of its time-wise consolidation to again come back in action. On the downside, the support is seen at 545 on a closing basis. Till the time it is not closing below that, he can wait and if required can do a rollover to the next series, but wait for some kind of a consolidation, and the moment it starts hovering above 570 again, the stock will again be in action. Even the open interest
can be the stop loss?
Can be the closing stop loss for this series. And even the open interest has been quite stunning in this series. It has increased by around 38% order. So definitely there is a participation in this counter.
Right.
Okay, the other query was in Z Entertainment. On this too, Somil is making some losses. He initiated his future on the long side at 543, and currently that's fallen to 513. Nirav, there was one of these days, I guess on Friday or sometime on Thursday, the stock corrected quite sharply, nearly 4 to 5%. How are the charts for Z Entertainment looking?
Yep. See, the chart here is positive actually. The stock has come down towards its support area of 510 and 500. In between that, it has been making a higher top, higher bottom formation, and every time it comes to its previous bottom, doesn't break it and goes up. So very likely this stock will again bounce up. One can still keep a stop loss of 495 for your longs and hold on till the next expiry. It can come up towards 550, 570 odd, which is where you can book profits.
Okay. The next one I want to discuss is a little more interesting because let's pull up Bajaj Finance and see what it's doing right now. There is substantial weakness right now. We must remember that Bajaj Finance has seen a stellar run over the past couple of months. In fact, since its earnings came through in the previous quarter. Since then, it has moved from the levels around 1800 to around 2500. Of course, it's come off in today's day of trade. We're expecting its earnings to come day after. And from last week up till now, well, it's implied volatility, of course, on a lot of strikes has also increased quite naturally because of an expectation of a large move, I reckon. Keeping all these factors in mind, Amit, how would you deal with Bajaj Finance at this point in time? If you would play options, how would you place your bets right now?
So frankly, this is a counter where it's a compounding story, where if you look at the performance of the price, it has been compounding every year. So this is definitely a buy and sit tight kind of a counter. So definitely options, I don't know whether they are liquid, but someone who is a compulsive trader can look for any kind of a dip to enter into this trade. So if you look at the broader structure also, the stock is very much positive even now. So 2400 is the quick momentum support. Okay. So one can trade with that as a stop loss and look for further upside towards 2600, 2650 on the higher side. Okay. And the similar trend is seen in Bajaj Finserv as well. So in fact, Bajaj Finserv has given a breakout above 6300 after a broad consolidation. So even those levels on the risk to reward perspective are very much favorable from these current levels. So which can see a further upside towards 6600 to 6700 levels on the higher side.
Okay. All right.
Well, the other stock which has bounced back after correcting 5.5% in yesterday's trade is Arvind. Let's just pull up that one. Today, there is some bit of recovery after yesterday's fall, so it's back above the mark of 400, up trading with gains of 4%. Nirav, any formation that you're seeing on the charts of Arvind, considering it corrected a lot yesterday and today it's bounced back?
See, this is one stock one should be avoiding. It is in a consolidation and a very small consolidation to that. It is, having good support around 380 levels and good resistance, strong resistance around 420 odd levels. So it is in the middle right now. Till it breaks out or breaks down, doesn't make sense to trade in this stock.
Okay, it doesn't really make sense to trade in this stock at this point in time, Arvind, despite the fact that it's moving up as much as 4%, at least in today's day of trade. An next query comes on YouTube, and this one is on the Nifty Banking Index. RB on YouTube has bought the Bank Nifty 26,800 put at 90 for the July 19 expiry, that is day after. And his question is actually quite simple. He wants to know what the view. If we can pull up this specific put, which expires a day after, that is a 26,800 put, which he has bought for 90. Nirav, I'm going to throw it back to you at this point. Keeping 2 days in mind, where do you expect the Nifty Bank to move, and what would your advice be when it comes to this specific put?
Yeah. I've said this earlier, it is very difficult to predict where Bank Nifty is going to move in this week, and that is why I believe he should be adding positions of 26,800 call strike as well. I'm expecting about 250-300 points of move in Bank Nifty in this weekly expiry, and only then can he look to make a profit. Bank Nifty has good support around 26,500. You're looking at the put strike, there is about 5-6 lakh open interest there on this 19 July put strike. But looking at the overall data, it doesn't tell you a clear picture. If you look at the 27,000 call strike as well, there's 11 lakh of open interest, so it can tilt there also. Very difficult to predict, and one day you're looking the market is down, one day it is up. Again, very, very difficult, and I would not like to make a statement as to if it is going to come down or go up. It is better to make a straddle and stay safe.
Okay, that's the view coming in on Bank Nifty. Amit, just want to take your view on the Nifty Pharma Index, since you identified Nifty IT 3-4 months back, and we've seen that trend working out. Pharma, it bounced back. I remember Nifty Pharma was the top sectoral gainer even in the June series, but once again yesterday, due to some fundamental reason, court rulings not going in favor of these companies. What is the technical trend of Nifty Pharma suggesting? Is it just a short-term correction that one saw yesterday? Can we expect a pullback?
So I've been negative on the entire pharma index over last 1.5 year odd, and still it is more of a wait and watch phase, where though the price, if you see last month on the rollover side as well as on the technical side, it was the first month after many months that the closing of Nifty Pharma Index was above the previous month's high. Even the rollovers were slightly on the balance side, but if you see, any kind of these requires a follow-up action, and which has been lacking. So it is more of a price pullback which has come. Maybe the price depth will be intact, but maybe the time consolidation can be still extended at the lower band. So I would monitor how it spans out at these levels. Maybe another couple of months of consolidation will provide more clarity from here on.
So right now, stay away?
So right now, if you see, if I just have to add on to a technical view, so Nifty Pharma has witnessed a non-stop rally from 1968 to 14,000 odd. And if you consider the 50% retracement, that was the May month low, which is around 7,994 odd. And it has bounced back from those levels. So these consolidations on Fibonacci, these retracements are very important to monitor. It is at the trend line breakout above 9,300. So the moment it starts hovering again above 9,300 on a closing basis, that's where I will consider the pharma has bottomed out.
All right, can we take a look at the Nifty again and one of the Nifty futures, because we do have a query, but I believe there is some mistake, because the query on Facebook from Ravi Bhadra is it profitable to buy the Nifty 10,990 with a stop loss of 1120? So somewhere there is a discrepancy in the data. That said, I'm going to go with the possibility of buying the Nifty at current market levels, because you can't have a stop loss which is higher than if you're buying the Nifty at this point in time. So Nirav, I'm going to come to you. Would you advise someone to take a fresh position buying the Nifty at 10,990 perhaps, and if yes, what levels would you be watching out for at this point in time?
Yeah. See, the answer is definitely one should not be buying. Staying away is very important sometimes, and this is one of those times when it is good to stay away on the index and stock fronts as well. One can be buying above 11,200 odd levels, which will ascertain that the breakout is in place. Also, if Nifty comes down, 10,500 will be a good level to buy again.
Okay, that's on Nifty futures. Just want to take one more query which is coming on YouTube from Vinay D. He's got the 10,000 call strike of Maruti after paying a premium of almost 20 rupees. He wants to know what to do with this one. It's out of the money call strike considering the underlying currently is trading somewhere about 93 or 93.50, 9400 to be very precise. 93.95 is where the underlying is. His premium, Amit, has fallen from 20 to 14. What would you advise him to do?
See, firstly, the strike price is too far. Ideally, any trade which you do on the call or the put side, the max limit should be 2% odd from the current price. So there is always a risk of, losing on the time value, because of course the price value on the intrinsic side will be too far for Maruti to reach during this expiry. So though the stock nature is positive, I would advise him to switch to either 9400 at the money or 9500, which is slightly out of the money counter, to play the call option. The trend remains positive till the time it is holding about 9350. It can surprise towards 9700 to 9720 in this expiry itself.
All right, fair enough. Some valid points made by Amit, but I think I'm going to take this time to thank both our experts for taking us through their views as well as solving a lot of our viewer queries. And I request our viewers to keep sending them. We can try and address as many as possible and help you out with your positions. So I'm going to thank Amit as well as Nirav for their views. And with that, I'm going to wrap the show. But lots more lined up, so stay tuned in on Bloomberg Quint and we'll keep bringing you more.